Well, BEPS is not the name for the sequel to Peter Jackson's Hobbit trilogy. In fact, it's an acronym for Base Erosion and Profit Shifting, the G20 OECD project currently rewriting the international tax law. The existing tax framework is developed for the industrial tax age, and it's no longer fit for purpose in today's digital world. The digital economy is itself the cause of the problem. It allows a separation of profits from the underlying economic activity which generates the profits, a shift from the country of source, and taxation then in low or no tax jurisdictions. BEPS strategies are estimated to reduce global company tax revenues by between $100 and $240 billion US annually. But how will these new BEPS measures impact global businesses? International Tax and Business Advisory Network RSM commissioned Euromoney Institutional Investor to conduct a global survey of its business readership to understand how cross-border businesses are themselves likely to be affected by BEPS. The survey found the BEPS measures are generating considerable strategic uncertainty and an increase in business costs as expected. Respondents also reported BEPS is not simply a matter for the world's largest corporations. Middle market businesses face exactly the same challenges. Some 70% of respondents report that BEPS is causing uncertainty in their business planning. 73% expect to restructure their global business operations in response. This includes over 40% who expect the need for either a total or a significant restructure. The surprise result from the survey was that middle market businesses see that they face the same BEPS challenges as does the big end of town, but without the equivalent in-house resources to address them. Specific issues of concern were the new permanent establishment rules, the new anti-treaty shopping rules, and the new transfer pricing documentation and country-by-country reporting rules. Over 90% of respondents expect an increase in compliance costs. Nearly 60% expect their compliance costs to increase by at least 10%, and a third expect compliance costs to increase by a whopping 25% or more. Over 70% of the respondents expect an increase in their global tax expense, particularly through an increase in unrelieved double taxation. Now, this is an interesting figure, particularly against the downward trending of national company tax rates. Over half the survey respondents supported the concept of BEPS as being a proxy global tax standard. However, in achieving that standard, the most important concerns were business practicality, simplicity, and transparency. Fairness and the cost of implementation were lower priority. The survey indicates that the majority of internationally active businesses will be affected by BEPS to some degree, with many significantly affected. The new international tax rules are expected to come into force from 2017, and there are already a number of domestic legislative tax changes in force in countries around the world, specifically in Australia. Businesses operating cross-border should engage with the BEPS measures now and assess the potential impact on their existing arrangements. Those who know are saying the cost consequences will be material, and changes to structures and systems cannot be achieved overnight. A review of the survey will provide further additional insights to business reactions, but for your own affected businesses, you should be seeking appropriate advice now. A brave new tax world awaits.